This time is very different. This time you have vehicles that traditional institutions, investors like the spot Bitcoin ETF are using to gain exposure to this asset class. There's also a plethora of more levered and structured Bitcoin derivative products that people can pile into as well to express their opinion and where they think the price is going. And that's something that's really unique that hasn't really been around in past halvings. So I think a lot of people will talk about, well, what happened last time, and what happened last time will probably happen this time. But I actually do think that given some of the changes we've talked about with the spot Bitcoin ETF, with the FASB changing their accounting rule around Bitcoin, I think we probably will see an acceleration.
Welcome to the Rose Show podcast. Thank you so much for joining us. I have the honor of being here today with Sue Ennis. You might have heard of Hut 8. Well, they're a new Hut 8. And we're going to talk about that. She's the head of investor relations. So she's the one to talk to you about everything that's going on at Hut. So how you doing over there today, Sue?
I'm good. Lots going on. The halving is 14 days away. And so really excited to get into it. There's lots to talk about today.
Absolutely. I'm so excited to speak with you about this halving. We're going to talk about Bitcoin, of course, the halving, and the new Hut 8. So, I like to get started with Bitcoin. A lot has happened since we last met last year. We have an ETF now. We have new all-time highs. I think we're 66, 67, 68 right now today. And it seems to be a bull market. We're rising significantly, and we have the halving upon us. Mm-hmm. So, Sue, what do you see for Bitcoin in the short term and through this halving period?
Yeah, so I think a lot of so every 4 years, the Bitcoin network which means the rewards that Bitcoin miners, the block rewards that are issued get cut in half. And so it's a natural built-in sort of anti-inflation supply hedge. Mm-hmm. And so we now have our halving coming up. Every 4 years, the halving is coming up on scheduled to happen on April 18th. And so it's a really meaningful time in terms of the Bitcoin network and the Bitcoin community, because it means there's going to be less new Bitcoin being circulated and in supply. So that's what we say, that it's sort of a natural built-in inflation hedge, which is interesting, obviously, given what's been happening ever since the pandemic in December 2020, with governments around the world just printing money to keep markets afloat, to keep, interest rates down. And obviously now we've been in an environment with interest rates going back up. So that's what's sort of special about Bitcoin, and that no one controls it. So this big halving event is coming up on April 18th. But I think what's really interesting this time around relative to past halving events is the fact that we now have, number one, a spot Bitcoin ETF that has been launched. So that has never been available before. That got launched in January. The likes of Invesco and Fidelities of the world have now been issuing these spot products that a lot of institutions have been piling into to get exposure to Bitcoin, direct commodity Bitcoin price exposure. And so year to date, there's been about 59.1 billion that has gone into these ETFs. And obviously that has created a tremendous amount of demand for Bitcoin, because a spot Bitcoin ETF needs to be matched 1-to-1 in terms of share of the ETF versus share of Bitcoin. So actual held Bitcoin in custody. So that's been a really interesting price driver. I think another thing that's been really interesting is from an accounting perspective. So in the US, the FASB actually approved for Bitcoin to be marked as mark to market on balance sheets. So effectively, it's now easier for corporates to use Bitcoin as a treasury strategy, because obviously the price of Bitcoin can go up and down, but they can now mark it to market as at the end of a quarter. So if it goes down, then goes back up, they can market to that price of Bitcoin at the end of the quarter, versus before they had to just continue to mark it down, and they couldn't effectively mark it back up on their balance sheet as having regained in value. So point is, we now have accounting regulations that are in favor of corporates now being able to hold Bitcoin on the balance sheet. And so these are two major sort of changes that have definitely, I think, contributed to wider adoption, wider understanding of the asset class itself. And also it's now easier, it created more on-ramps for people to participate and get exposure to this asset class, which is really cool. And then you have the supply shock coming in 2 weeks. And so I think also another additional dynamic or something that people have been talking about is where does the price go from here? So Kathy Wood of ARC Shares, we love Kathy. She and quite a few other pundits often talk about like if Bitcoin were to take even 2 to 3% of gold's place in investors' portfolios. So gold has like a $12 trillion market cap right now. And Bitcoin, they do say is like digital gold, although, it's obviously got much different properties, but it has a similar place in an investor's portfolio. So if Bitcoin were to take 2 to 3% of gold's market cap, that in and of itself, with 21 Bitcoin that will ever be made, is incredibly accretive and definitely north of 150,000, 175,000 per Bitcoin, even up in closer to the million range. So, I mean, again, I'm not saying that I'm forecasting a price per Bitcoin of $1 million, but yeah, there's a lot to be excited about right now in terms of looking at the asset class and a lot of catalysts for growth. So,
Well
which we
said.
haven't seen in past halvings. Yeah.
Love it. You really brought us up to speed with all the recent Bitcoin events and news that have been going on. And yeah, that spot ETF definitely brought a lot of eyes on Bitcoin and helped be a catalyst for mass adoption. And I love that how you mentioned all the market cap. And I think that's so important for people to realize that, Bitcoin has much more room for growth to fit in people's portfolios. And plus the decentralization nature of Bitcoin is so important, especially during these times as we have monetary destruction and mass inflation with, massive fiscal spending here in the US. And it's not stopping anytime soon. It's only going to increase. So yeah, I like your modest, very conservative ballpark idea of 150 to 175K per Bitcoin. But we know the sky's the limit. And there's many people who say million, 1.5, 2 million and up. We just know that it's going to continue. So thank you so much for that. And, Bitcoin just gets stronger in time. And this halving is just another protection against the inflation. Love that. Love all that. So, okay, so I want to talk about this new Hut 8. Now, everyone knows Hut is one of North America's largest Bitcoin miners. You have built such a beautiful business. I'm so excited about this recent merger. You're also a leading vertically integrated operator of large-scale energy infrastructure. I don't know if everyone knows that, but you have diversified quite well and differentiated your business model. So tell us about what shareholders can expect from this new HUD 8 in the next 3 to 6 months and through this halving.
Yeah, so I think, so first of all, this merger had 8. So we merged with one of the largest private Bitcoin miners.
Wow.
It had also built out a really interesting diversified business. And so we merged with them at the beginning of December. It took us about 10 months to get that merger approved through the SEC. So it was really a long time that shareholders had to wait. And we were sort of in a holding pattern. We couldn't do a lot of growth. We couldn't execute on a lot of growth while we were waiting for the SEC to approve this merger. So it was a really long time company coming. It was the largest merger ever in the industry. And then I think what I'm extremely excited about with this company is, so we're now US domiciled. We've got a little over 1 gigawatt of energy under management, a little over 9,000 Bitcoin still on our balance sheet. But they've also built this really interesting business called Managed Services, which is an end-to-end energy enterprise infrastructure services business. So any renewable power player, sovereign nation, private equity firm that wants to get exposure to Bitcoin mining, whether it be for load balancing, to actually get exposure to the asset class, or just project level returns, this is the business that would partner with those types of institutions. And this type of business already exists in oil and gas. This sort of closest proxy is this company called Halliburton. It trades at about 12 times forward PE. And so personally, I think this is one of the killer apps in terms of why Hut 8, because we're building businesses that are really like a call option on the growth of this industry and on the growth of really just the alt energy enterprise infrastructure space. Because I think our bet is that Bitcoin mining is an incredible return on investment for stranded energy and stranded electrons. The Bitcoin mining is the absolute best means to get an ROI on stranded electrons right now. But as technology continues to evolve, as we're already seeing with AI coming on, AI is less latency sensitive, and so can be stood up in areas that are more remote relative to populations, thermal batteries. As we see more technology come online, we think our bet is that the value of that electron, that stranded electron, is only going to increase. And so right now, we look at it as, okay, locking up as many cheap megawatts via Bitcoin mining and really understanding how to manage this infrastructure is an incredible way for us to lock in the current, but also the future value of some of these stranded renewable energy or just stranded electrons. So yeah, I think that's what's really exciting about HUD 8 is we've really beefed up our building expertise, our portfolio, our business lines. And yeah, we've got a new CEO now named Asher Janut at the helm. And yeah, I'm excited for the market to get to know him better. He's a very, very shareholder return, capital allocation focused operator. So yeah.
Wow, exciting. I love the stranded energy and that whole concept and managed services. It's like you're using the business model that has been in place in the oil and energy market and industry, and you're replicating that in the Bitcoin mining. Brilliant. I love that. So how is this new CEO, Asher Janut? He looks amazing when I hear him speaking. How has
Yeah.
his transition been at HUT?
Yeah. So it was like, I'm gonna be super candid with you guys. It's been a really wild, like, couple months. So obviously Jamie, our old CEO, she knew that she wanted to do a meaningful M&A in the bear market because we had the balance sheet to do it, we had the liquidity, etc. So we identified our target. It was US Bitcoin Corp. Yes, we're going to do this marriage. It's going to be amazing. It took us many months longer than we thought it was to get it through the SEC, as I mentioned. And then we closed on December 1st. And then about 6 weeks later, a really nasty short report came out on us, and which we refuted all of the allegations. And for any of your audience, I can't obviously legally get too much into it, but any of your audience can Google sort of how the short reports work and often who they're working with, aka people who are short your stock and who don't like the idea of not being able to load up on a deal if they're told that a deal isn't coming. Again, that's not me commenting. I'm just saying that's sort of how shorting works. And we refuted the allegations in that short report, but it obviously caused, I think it was like a 40% stock drop in one day. And that was on the day that we were ringing the NASDAQ bell. And then, the board a couple weeks later decided that Asher was the right person to be at the helm of this company and take this company into the next 3, 5, 10 years. So it was a lot, like, super candidly, our shareholders have been through a lot. Uh, uh, and I'm really excited for now. We just had our first quarter of earnings, and it was the earnings that really Asher wasn't even at the helm yet, but even the way that we're now speaking to the market, I think we're setting a new precedence of transparency, more data, and really just getting that shareholder confidence back, because it certainly was understandably shook in January and the beginning of February. But yeah, I'm really excited as to the direction Asher's going to take this company in. One of the books that he is modeling a lot of his philosophies behind how he's running this company is called The Outliers. And it's 8 unconventional CEOs, and effectively these 8 unconventional CEOs over the past 60 years have outperformed their peer group by 20 times and the S&P 500 by 7 times. And it was through a means of, like, smart capital allocation policy, being extremely focused on being the lowest cost operator. And that's how he's effectively modeling how he thinks about this business moving forward. And anyway, so if you or any of your shareholders want me to mail you the book, we're mailing it out to anyone who wants it, because again, it's just helping us teach the market, like, how we're doing things differently this time around. And yeah, I'm really excited about it.
Absolutely. I love that book. And it's always nice to have a fresh, new perspective here as you go through this merger. And I have to tell you, I am so excited. Your recent earnings report was fantastic, and the future just looks so bright for HUD 8. And I have to say, I love what always strikes me about HUD 8 is not only your large stack, but it's your disciplined growth. It's the discipline that HUD 8 has, and you're always trying to get the best value. And it's about, I know going into the halving as well, you're probably going to be, there's going to be consolidation in the industry, and
Yeah.
you're going to look for the best ways to grow. And that's what I want to talk about as well. But let's start with this new CEO. So excited. He talked about the two pillars of growth and the self-mining business, which I believe is about 70% of your revenues, and
Yeah.
then diversifying your broader businesses. And I know you just mentioned about the managed services, but then the
Mhm.
AI and the HPC, the high performance
Yeah.
computing. And he actually was quoted saying it's subscale today, which I love his honesty and how
Totally.
forthright he is about everything. And that you're going to be required to have more investments to handle that HPC. Tell us your plans and all that, and the growth that we can expect from HUD 8 in the HPC space.
Yeah. So again, I think like when I'm talking about like the new precedent with respect to how we talk to the market, we really are being focused more on transparency, being candid, and really just quite honestly, candor. So yeah, the HPC business is not where we want it to be right now, but it's 5 traditional cloud and co-location data centers in Canada. And also like I think the reason why we're still hanging on to this business is because the CAGRs are pretty bullish in terms of everyone's continuing to go digital. Demand for compute is only going up and to the right. And so right now the CAGRs of that business are looking anywhere from 8 to 15% in the industry. And so that's still a prong of our diversified revenue strategy that we think is certainly worth exploring. And we're definitely going to keep the market updated in terms of, how we clean up that business. Because again, there is still very much like an overarching trend as to why we would want to stay in that business and, have it for diversified revenues. And then it's sort of what the bridge between the HPC and then the Bitcoin mining space is AI. So we announced that we placed an order for 1,000 H100s. And what's really interesting about AI is the requirements to run AI GPUs are not as robust as they are in the traditional high performance cloud and compute space, but are obviously more robust and sophisticated than what's needed in the Bitcoin mining ASIC space. So it's sort of like this bridge in between the two worlds from an infrastructure perspective. And then obviously from a macroeconomic like industry trend and demand, it's the demand for AI is blowing through the roof. So NVIDIA, for example, actually created their own power and infrastructure team to help their AI chip customers source and find the infrastructure and the power to actually, and the data centers to run these chips. So I guess what I'm trying to say is every sort of piece of our business, whether it be owning and operating enterprise energy infrastructure, owning and operating AI chips, high performance compute, cloud and co-location, it's all sort of under the umbrella of where we think, again, just the energy industry is going in general. And that's towards high density compute. Energy is scarce. You need people who know how to build fast and at a premium, which we do, and also who know how to manage and run these assets. That's sort of the 3 different areas in our managed services business, which I talked about. That I think, is really, again, a call option on where enterprise energy and sort of alt energy infrastructure is going. And we're positioned to capture it. So.
Wow, exciting. Could you please tell us more about where this energy space is going, what you guys see at HUD 8, and how the managed services will capitalize on that?
Yeah. So I think, again, so managed services, it's end-to-end enterprise energy infrastructure. So everything from designing the infrastructure to procuring machines for customers to managing those machines to getting customers for the customers inside that infrastructure if they want to host or whatnot. Billing, software, all of that is included in sort of this services business of ours. And I think, again, some of the trends that we're seeing is number one is renewable power players looking at mining as a potential load balancing solution. But again, a lot of those renewable power players, they don't want to buy Bitcoin equipment, stand up energy infrastructure, stand up the mining infrastructure and then manage it, etc. So what they often do is they'll get a third party to come in and finance a project. And then that party would then get HUT 8 to come in, run it, build it, make it happen. And yeah, so that's sort of one area. And then I think also what we're seeing is a lot of different nations, like governments and nations are coming in and realizing that, again, this technology, Bitcoin mining, is an option and an opportunity for them to monetize stranded energy assets. So for example, if you look at Ethiopia has something like 99.9% renewable power. It's a ton of solar. And so I think, we're certainly seeing an uptick in conversations from governments saying, I don't really know how to build this infrastructure, but I know that I need to do it because it's an opportunity to monetize effectively, a stranded asset, and then potentially reinvest those proceeds into my country, into my townships. And so that's another customer potentially for this business. And then also if you look at, even in the landfill, so the methane landfills contribute something like 70% of global methane. And it's now also being proven that Bitcoin mining can be a potential solution for methane mitigation. So methane that would otherwise be flared into the atmosphere from oil and gas production or landfills, you can effectively set up Bitcoin mining infrastructure and repatriate that vented methane into producing digital energy. And so we haven't done it yet, but like personally, I would love to see us partnering with like a Miami or a New York and, setting up infrastructure with our managed services business at some of the landfill sites there, because obviously Miami, New York, especially Miami, are pretty pro Bitcoin. So yeah, that's one thing. That's one direction of the managed services business that we're pretty jazzed about. And again, just in general, the utility of Bitcoin mining, like as being an actual partner in the global transition to renewable energy. So
it's exciting. I think this is only the beginning.
Mhm.
And there's much more to come. So very exciting to watch HUT 8 into that space. Hopefully you do get Miami. That would be exciting. I know they're very Bitcoin friendly down there with Michael Saylor down
Yeah,
there. I remember we walking around, we went to the convention last year, walking around their little parks there. It was like they accept Bitcoin and these little vendors. It was pretty great
yeah,
environment. Yeah, absolutely. So I want to talk about this self-mining business and the halving. Okay, halving we have coming up in 2 weeks. And we know that what it means is the mining rewards are going to be cut in half. I think it's 6.25 Bitcoin to 3.125 Bitcoin.
yeah,
What we'd like to know is if you could walk us through the halving and how will it affect HUT 8? And
yeah,
how is HUT 8 positioning itself through this halving?
yeah. So one of the uh biggest pieces obviously of being a miner is your power and your energy and your ability, particularly as a miner, to curtail that power so that you can take advantage of um, effectively the highest return on electrons. So as a miner, if you are in certain jurisdictions where we are, for example, Texas and Nebraska and New York, we have the opportunity to effectively power down if it makes more sense to sell our energy back to the grid, or again, power up and mine Bitcoin if the higher return on electron is to mine Bitcoin. And so I think going into the halving, one of the things that we're certainly thinking about is, how we can continue to maintain, well, sorry, not one of the things we're thinking about, one of the sort of competitive edges we have is that we have a dynamic power curtailment strategy across our entire power portfolio. So regardless of sort of where the network hash rate flushes out once the halving happens, where power prices go, we've effectively set our business up so that we can be super opportunistic in terms of how we use that electron. And I also think after the halving, what we're certainly waiting for is to take advantage of price fluctuations in terms of equipment. So we do think that there's going to be quite a few miners who may potentially go out of business once, the main source of income gets cut in half. And right now, our focus has been now and going into the halving is procuring as many cheap megawatts as possible, because as we talked about, NVIDIA hiring their own power and infrastructure team to help clients get and source power, energy is scarce. Cheap megawatts are scarce. Stranded energy electrons have more potential higher value use cases, getting equipment is not scarce. There is a ton of machine supply out there, but so that's why that's something that we haven't really been focused on yet, because we want to see in the halving who gets flushed out, what equipment goes on sale, because we're also at the beginning of a new generation of mining equipment. So it's kind of the equivalent of like, do you buy the iPhone 14s Plus 2 weeks before the iPhone 15 comes out, when the iPhone 14s is probably going to go on sale and the iPhone 15s, you know what I mean? So that's sort of like, that's another piece of this halving dynamic that we're certainly watching, because we obviously want to be very mindful as to, being the lowest cost operator includes making, your equipment purchases at the right times, at the right prices. And we think there's a super interesting opportunity in the next couple of weeks to see sort of where the market lands on the equipment side. But what's not going to be affected by the halving and is going to continue is that energy is scarce. So that's been a big priority for us to build up in that space.
God bless you. If that you sneezing. Thank you so much for that. What always strikes me with Hut 8 is the patience. It's the seeking out growth with discipline. And that's so important to maintain that competitive advantage. You want to keep your costs low and increase your margins. And so I love that approach. That's great. The equipment's always there. It's not a scarcity on that, but there is always a scarcity on energy. I mean, energy demand is through the roof. And I've spoken with many energy market experts, and they say we need all sources. And Bitcoin mining seems to be the solution for all that. So thank you for that. Now, during this halving period, I've been talking about it as well as a business person myself, saying there's probably going to be much consolidation going on in this space. And when you're cutting it in half as you are, I'm sure a lot of miners aren't prepared for this. What do you foresee during this time? And what plans do you have to maybe any more mergers and acquisitions in mind, or that you can talk about, or any plans to buy new sites?
Yeah, so again, I think one of, we talked about how we're very opportunistic in terms of when we allocate dollars and why and at what time. So for example, US Bitcoin Corp, because they were a privately traded company, the market obviously didn't know a lot about sort of some of their history of building their power portfolio, but they actually were able to build about 730 megawatts of energy under management with only 109 million raised. And that came from being extremely strategic with their use of debt, obviously with their use of raising capital, but also Asher's a bit of a bankruptcy junkie. So he likes going shopping during bankruptcy proceedings. So we were able to scoop up a bunch of assets in the Compute North bankruptcy, including 50% of a substation in Texas. And so again, I think just, how we look at continuing to grow this business is being opportunistic. And we do think there's going to be really interesting opportunities that come up in the next 3 weeks when people's incomes are effectively cut in half. But yeah, so I think, there's nothing super exciting that I can disclose just yet, but just stay tuned, because it's going to be a very interesting next 3 weeks.
Yes, we absolutely will. And I know Hut 8 has a rather large stack of Bitcoin holdings that you may deploy. Do you think you're getting ready to maybe deploy some of it?
Yeah, so we have been super candid that we changed our treasury strategy. So
Tell us about that.
So under Jamie Leverton's leadership, she was diehard hodl. This is what we're just going to hodl. There was a period in time in 2021 when we actually had lent out about 2,000 of our Bitcoin and we're earning yield on that. So that was great. But primarily it was, we're hanging on to our stack, which made a lot of sense, because obviously if we had started selling at like 37.43, we would have missed a ton of upside like we're already seeing right now when it's trading at $67,000. But I think one of the things we've communicated is that we are going to be a bit more thoughtful in terms of how we leverage the stack. So potentially using derivatives to pull working capital from the stack. We did take out a loan with Coinbase for about 65 million, again, using about a little over 2,400 Bitcoin as collateral. And we were able to actually reduce some of that collateral because the price of Bitcoin went up. So now it's only about 1,800 of our over 9,000 stack that's encumbered against that loan. So again, I think the focus is on being strategic with how we use this massive treasury but also being mindful of the fact that, you know, in the next month or so, or potentially obviously 6 to 12 months, we could see it go up beyond, well beyond into six figures and where it's trading now. So we obviously don't want to sell that entire inventory down, because we do believe in the rate of price appreciation. But yeah, definitely using that stack to our advantage and not being so reliant on shareholder dilution to grow this business. So that is one thing in the mining industry that's a little tough because it's very capital intensive, which means that often, basically all of us, including Hut 8, particularly in the past, we've had to rely on equity raises, on hitting ATMs, and effectively issuing more shares and diluting shareholders in order to continue to keep the lights on. And so we're trying to take a different approach and a more capital allocation with shareholder return approach in mind, i.e., you know, dilution isn't a sound business model in our opinion. So how can we be more thoughtful about how we grow this business with, again, shareholder value in mind?
I love that. That's exactly what the goal is as a publicly traded company, is to bring value to the shareholders and to minimize on the dilution by having future offerings is key. And you have a large Bitcoin stack that can be very helpful during this halving period, you know, not only to sustain the business, the current business, but to grow and to seize opportunities strategically. Love that. Excellent, excellent stuff there. Now, halving coming up in 2 weeks. I know everyone wants to know this Bitcoin pricing, and everyone likes to talk about Bitcoin, the price where it's at. You mentioned that next 6 to 12 months, you could see 6 digits. I agree on that. I think that's very possible. Could you just tell us about the pattern? What is the usual pattern of Bitcoin pricing during the halving and then afterwards?
Yeah. So usually in past cycles, we haven't seen tremendous price action upward immediately after a halving. It's usually been anywhere from like 6 to 12 to 18 months after. It's not usually an immediate uptick. But again, this time is very different. This time you have vehicles that traditional institutions, investors like the spot Bitcoin ETF are using to gain exposure to this asset class. There's also a plethora of more levered and structured Bitcoin derivative products that people can pile into as well to express their opinion and where they think the price is going. And that's something that's really unique that hasn't really been around in past halvings. So I think a lot of people will talk about, well, what happened last time, and what happened last time will probably happen this time. But I actually do think that given some of the changes we've talked about with the spot Bitcoin ETF, with the FASB changing their accounting rule around Bitcoin, I think we probably will see an acceleration of adoption, obviously in a diminishing supply climate. And also another thing that's different this time around versus any other time is the amount of analyst coverage, sell side analyst coverage on the crypto and Bitcoin mining space. So in 2020, you had there was maybe 2 or 3 analysts covering the space. Now you have anywhere from 10 to 15. And that's a huge group, relatively speaking, versus past halvings of sophisticated analysts that are writing notes to their groups of thousands of institutions and pension plans and investors about why this is an investable asset class. So it's the education, the level of education about it has certainly matured since the last halving. So point is, yeah, I do think we may see an accelerated sort of price action than what we've seen in previous cycles.
Seems very likely. And I always say it's about supply and demand. When you have increasing demand, like you mentioned, all these new analysts covering Bitcoin, and you still have a finite supply of 21 million, you could definitely see a rise in that pricing pretty quickly. So
Yeah.
thanks so much for that. Now, Sue, I want you to please, we're going to wrap up now. I want you to tell us about what shareholders can expect from Hut 8 in the next 6, 12 months or 3 to 5 years. What is the long-term, mid to long-term goal for Hut 8?
Yeah, so the mid to long-term goal is to certainly build a thriving and robust energy infrastructure business to return value to shareholders, to capture more market share. And also, like I said earlier and in other parts of this call, to really be leaders in terms of transparency, in terms of how we connect with the market, The internet is the new decentralized hedge fund. I think investors are sick of being gaslit by corporations. And so, we look at our investors. I mean, they're obviously also co-owners in this business with us. And so increasing transparency, obviously increasing returns, becoming one of the lowest cost operators, and really growing this energy infrastructure platform so that we capture the current, but also the future value of the electron and stay ahead of the trend in terms of as technology continues to evolve is like some of the things that I think we're really focused on for the next, 2, 3, 5 years.
Thank you so much, Sue. This is exciting, and we are so excited to see the new Hut 8 through the halving and into the next coming years. I love the diversification you have at Hut 8. Thank you so much.
Yeah, thank you so much for having me. And like I said, if any of your audience wants me to send them the book, The Outliers, happy to do so. Please DM me at Big Suey on Twitter, and always happy to be on and chatting with you. So thank you so much for having me.
Thank you so much. And we'll check in again, maybe in the next few months or next few quarters, about where Hut 8 is at and the new plans we have at Hut 8. Thank you so much, Sue.
Great, thank you.